Thank you for joining me. I'm Alex, and today I want to go over People's United Financial. And I'm doing this for two reasons. Number one, I've done a lot of banking stocks this week, and minor note here, while Bank of America and Goldman Sachs had announced earnings or reported earnings last week, Yahoo Finance didn't have them, and I looked at Google Finance, CNN Money, Nasdaq.com, a few others, and none of them had comparable financials on either stock. And while this fits in with this week, it also fits in with the dividend aristocrats because it's one of the dividend aristocrat stocks, which means that they've raised their dividends for 25 years in a row. And this is a good example of what that actually means. So they do banking, and they're not actually very big. So market cap is $7 billion, current price is $16.06. Their dividend yield is 4.42% with the payout ratio of 56%. And as many others of the dividend aristocrats, the payout ratio tends to get pretty much up there, which is not necessarily a problem. But there's many companies that have been paying a dividend for a long time that actually don't really know what else to do with their money or how best to grow their business instead of paying the dividend. So that's one reason why the dividend or the payout ratio rather gets up there. And the other is that obviously no matter how the business is doing, they don't want to cut their dividend because the stock price would just take a nosedive. So current revenue, $1.8 billion, current earnings, $520 million, which is up 10%, which gives them PE of under 13 with a forward PE of under 11. It's slightly over 10.5. Total assets, $58 billion, total liabilities, $50 billion, which gives them total stockholders' equity of $7.9 billion, which is up 20%, which is pretty amazing. So to sum that all up, for a value investor, I don't really like this balance sheet, but it's pretty decent. The PE is fairly low, but obviously higher than Morgan Stanley, Goldman Sachs, Citigroup, Bank of America. Not sure about Wells Fargo actually. But the forward PE is actually pretty decent, but again, higher than all of the above. Revenue and earnings growth is higher than all of the above. And the dividend yield is obviously double of what all the others have. And again, with the dividend aristocrat, you can pretty much rely on them increasing their dividend every year. So not only do you get over 4% right now, you can pretty much count on that increasing slightly, very slightly, next year, and pretty much every year thereafter, as long as their fundamentals are fairly solid, and as long as they're not losing money, they're not going to cut the dividend, and they're probably going to increase it. And by probably, I mean 95% chance. So for a value investor, I think it's a decent stock. I don't think it's a great stock, but again, the dividend yield makes up for a lot, and the balance sheet doesn't look bad, and the PE is still way under 20, going towards 10. So overall, very good stock. For a dividend investor, the dividend yield is amazing. Increasing their dividend 25 years in a row, probably very safe choice. That very safe that they will increase their dividend for the next few years. So for a dividend investor, I can strongly recommend the stock. For a growth investor, I don't think that either the revenue or the earnings growth really justifies buying the stock. I don't think it's a stock that will double over the next 5 years. So for a growth investor, you're probably better off buying some other stock elsewhere. But looks like a very good stock for dividend investors, looks like a decent stock for dividend and value investors actually. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.